Hi, this is Adam Khoo here, and a lot of people have asked me what my typical day is like. How do I spend my day investing and trading? So I thought I'd create this video to show you how I actually invest and trade on a typical day. So I spend about 2 hours or so every day looking at the markets. I spend the first hour during the Asian morning session. So I'm in Singapore, and typically at about 10 a.m., I would then spend that time to invest in Asian markets. And I'll spend another hour or so in the evening, which is now, in fact, now as you can see, it's 9:24 p.m. local time, Singapore. So in 6 minutes, the US market would open, and I would then spend another hour and a half to invest and trade in the US markets. So in total, I'm managing 5 accounts. 2 accounts are Asian accounts where I invest and trade in Asia, so Hong Kong, Singapore primarily. So I would invest that again in the Asian morning session. And my other 3 accounts are for US listed stocks, which I manage when the US market opens again in 6 minutes, and I'm going to spend about an hour to an hour and a half. It depends. If I've got no investments or trades, then I may even spend half an hour. But if I've got something to buy, something to trade, I may spend up to an hour and a half. So what are my 3 accounts for the US markets? My first account would be this account, which is primarily just for short-term trading, mainly using options. And then another account would be over here. This is my second account, and this account combines both investing as well as trading in options. And my third account is, I'm using my phone to look at my third account, right? So this is my third account. So there's one account, my second account over here, and my third account. So because I'm managing 3 accounts at the same time, I have to sometimes duplicate or triplicate certain trades I make. But there are certain investments where I only perform it on a particular account, because certain accounts are focused only on trading. Some accounts are focused on both investing and trading. So the market's going to open in 4 minutes, and I'm going to go through my typical routine and show you what I actually do. Okay, so let's see. How's the market going to open today? Well, we can take a look at the futures to kind of get a forecast, right? So let's begin by looking at the S&P 500 futures /ES. So looking at the S&P futures, you can see that, yep, it looks like we are slightly bullish, well, barely bullish, up about 7 points. So likelihood is we're going to open bullish today. Whether we're going to close bullish is anyone's guess, right? Because market can open bullish and end up bearish. We'll see how it goes. But so far today, S&P looks like it's opening slightly positive. How about the Dow futures, right? So /YM, boom, that's my Dow futures. And my Dow futures, well, initially you can see it started bearish, but now it's still bearish, but it's kind of like at break even, right? Slightly down like 24 points. We can see a little pin bar right there on the daily candles on the Dow futures. But again, the futures have not closed, so anything can happen. We could close bearish on the Dow. Let's finally look at the NASDAQ futures /NQ. Boom. NASDAQ futures look pretty strong, right? So the NASDAQ futures up 100 points. That's almost 1%. Now, one of the reasons why is because in the last 2 weeks, the NASDAQ has sold off a lot more than the Dow and S&P. In fact, the Dow and S&P has been rallying and the NASDAQ has been going down. So the NASDAQ short-term looks oversold. So it looks like it's kind of like bouncing back up to kind of like catch up with the S&P and Dow Jones. So again, markets opening in 3 minutes. We'll see how it goes. But so far, it looks like NASDAQ would open strongly, bullish. And well, let's see whether it can close bullish. If you look at the actual market itself, let's look at the SPX, S&P 500 index. Where are we? Okay. So looking at the S&P, you can see, well, we've got the previous support there, previous support. These are on the daily candles, right? So you got your really nice wave up, wave down, wave up, wave down, wave up. And we are now going through a slight correction, finding support at the 20 EMA. Usually the 20 EMA you can see is not that strong, although sometimes it can find support over there, right? So, well, we'll see if we can bounce off the support. If not, it probably may go back down to the 50 moving average, find support, and then bounce back up. We are still in a bullish market, all right? The trend is up, so the path of least resistance is we're continuing to go up. Again, we can't predict the short-term future. All we can do is to read the trend of the market. So when the market's on an uptrend, probability is prices will keep going higher, more likely to go up than go down until there's a change in trend. So right now the trend is up, so likelihood we're gonna continue to go up. All right, okay, so that's the S&P. Looking at the Dow Jones DJX, you can see the Dow has been really strong because the Dow consists of a lot of industrial companies. So because I mentioned in my previous videos that because there's a lot of optimism about the rebounding economy, about future inflation, banks, industrials are really getting into that swing, right? So the Dow really took off. But you can see right now the Dow's a bit overbought, right? A bit overstretched, and it kind of like closed with a bearish pin bar on Thursday, right? So bearish pin bar usually is a rejection. Ooh, markets open, right? So markets open right there. So not surprised if we get a bit of correction on the Dow, right? So again, wave up, wave down, wave up, wave down, wave up. Looks like we could be waving down, right? Again, Dow has opened slightly negative. We'll see whether it pulls back down, okay? The NASDAQ finally just opened, boom. As we anticipated, NASDAQ has opened bullish. You can see the NASDAQ has a strong support at this 100 moving average, right? Wave up, wave down, and then we have a series of minor corrections. Another impulsive wave, and another boom, another big wave down. That's what killed a lot of people who had a lot of too much tech stocks in their portfolio, not diversified enough, especially the overpriced tech stock really got whacked 2 weeks ago, right? So we found support at the 100 moving average, bounced off, and then it found resistance at the 50, right? Found resistance, came back down, retesting the 100. So now it looks like it's retested the 100. Looks like we may be going back up again. For now, you never know. All right, if we find that resistance again, we could see a double bottom. Again, we can't predict. We can only look at the charts and ascertain the current trend. So again, current trend right now, we are bullish on all three indexes for now, but things could change. Okay, so markets open, time to get to work. What's the first thing I do? The first thing I do is I look at my existing trades and to see if there's any which I need to cut loss, any in danger, or are there some which I can take profit, all right? So I'll start with this account. Let me go to my monitor, boom, right? So these are my existing trades you can see over here. And these are the open profit and loss, right? So far they're all profitable, except this guy's negative. This guy's making an unrealized loss. Sometimes option prices could be a bit wonky. So, sometimes you can swing to a big profit, a big loss intraday. Oop, this one suddenly swung to a big loss, but I can tell you this is mispricing, right? I'll show you why later on, right? So what I do is I go to my charts, and these are all the stocks which I have open trades in, right? And let me open up. First one, Chewy. Let's look at Chewy. Okay. So what you see over here, this red line is so-called my stop loss level. All right. So in other words, if this hits the red line, I cut loss, is a losing trade. So as long as the price remains above 75, I'm safe, right? I'm safe on that one, right? So far, this one looks pretty safe. Chewy looks safe. You can see it almost hit my stop loss twice, but right now it looks like it's going back up for now. So not at my stop loss yet. You can see Chewy's over there, right? It's a bull put spread on Chewy, right? So currently it's still negative, all right? But this guy expires on the 9th of April. 9th of April. So these are bull put spreads or credit spreads. So what that means is that on the 9th of April, as long as it stays above $75 by the 9th of April, this would be a fully profitable trade. But if it goes below $75 anytime before the expiration, then I gotta cut my loss, right? So far this one looks safe. I've got, some time to go on that guy, all right? Next one, Baidu. All right, Baidu. Okay, so Baidu, where are we right now? So my stop loss level is 225. Right now it's at 261. I'm still safe. Okay. Next one, CRM. My red line is at 190. So same thing. If it hits 190, it's a losing trade. If it stays above 190 by the expiration date, which is 21st of April, then it's a profitable trade. So I just have to ensure that it doesn't hit 190, right? Next one, Alphabet. Okay, so 1760, that's my stop loss. Very far away, really safe right now. Next one, Abbott Laboratories, 105, that's my stop loss. You can see why if I open Abbott, sorry, right? So you can see this guy expires on the 23rd of April. Okay, and you can see that, again, it's a bull put spread where it's 105, sell the put, 100 buy the put. Okay, so that is the price, 105. So if the price goes below 105, then I lose money. If it stays above 105 by the 23rd of April, I make money. Okay, so right now it's still pretty safe above 105. Now Abbott should actually be having you see it jumped to now minus 412. Now sometimes option prices can be a bit wonky in the first 1 hour, so it may not be very accurate. So by right, this should be a profitable trade, but because of wonky option pricing, it turns negative, right? But this guy should be positive. It should be positive, right? So in fact, if I go to my other account over here, why are you plus 2? Okay, so I've got the same trade over here. If I go to my combos, there we go. So can you see Abbott? There we go. So you can see, in actual fact, Abbott, this is the exact same trade, guys. The exact same trade, Abbott, 105, 100 is $1,000 unrealized profit. Can you see that? So why is the exact same trade profitable here, but it's negative here, right? Because I told you the option pricing is wonky, right? Sometimes on a platform, the first 1 hour is wonky, not accurate. So you have to really understand the trade to know that that's bullshit. You should be making me money, right? Okay. Next one would be Facebook. So my cut loss is 230, very safe on Facebook. In fact, I could be taking profit soon. Let me see. Facebook right now. Oh, I don't have trade on Facebook here. My Facebook trade is on the other account. Okay. So let's see if I can take some profit on Facebook. Oh, done. You know what? I actually already took profit. I forgot. Done it. Right? In fact, you look at my trades. I think I took profit last week. I forgot I took profit. Okay, so I'm going to remove Facebook. All right, so the next one would be INTU. So my stop loss at 310, very far away. I'm safe. Next one, LRCX. Stop loss 410, very safe. Adobe. Where's my Adobe stop loss? Let's see now. Just double check. So Adobe, it's 400, 390, which means below 400, I lose money by the 1st of April. So my stop loss would be at 400. Let me draw it in 400. Dung dung. Change it to red. Okay, that's my danger zone. All right, danger zone. Don't get below 400, please. Okay, Spotify. Danger zone at 250. You can see it almost hit my danger zone, right? And then it rebounded. Hopefully it's going back up now. Okay. Next, Amazon. My danger zone is at 2850, which is here, right? So far, so good. Nvidia, danger zone there. So far, so good. Square. Again, away. So it almost hit my stop loss. Whoa, that was really close, right? Now it's up there. VIX, I've got a trade on VIX as well. So VIX, I'm basically long the VIX, right? It's a long trade, which means that if VIX goes up, I'm making money, right? So I'm betting that VIX is gonna go up in the next couple of weeks, all right? So I've got a VIX trade on. That's my VIX trade. Right now it's still negative, right? Because I need VIX to go up for that to be positive. Okay, that's it. So those are my open trades. So for tonight, I don't see anything which I have to cut loss, right? It's all safe. So that's the first thing I do. I check my existing trades to see if there anything I need to manage, I need to cut loss. So far none. Let me just double check on my other account here that I have got. Okay. So for example, Airbot, you can see that the profit is 1247. That's the unrealized profit. And usually I would take profit when I have maximized the profit. So the maximum profit is about $2,000. So once it hits like 1,008 or 1,009, I will take profits, right? So I still got 704 left to go. So this tells me how much more profit there is to squeeze from this trade. So $700 profit more. Wait a few more days, I'll take profit on Abbott Laboratories. Adobe, again, I've only made $944. I've got $1,000 left to make. As time passes, I make more and more money because these are credit spreads. Because as time passes, the options lose value and I make money because I'm shorting the options, okay? So same thing with this one. You can see none of them is close to 1,009. Usually I want to see 1,009 to 1,008, then I'll take my profits, right? Okay, so Chewy, you can see is still negative. I've got 4 negative trades right now, but they should turn positive over time. Okay, so Chewy is negative, but again, like Chewy, you saw that it's still not at my stop loss yet. So I can leave it and hopefully it would be turning positive in a while, right? Now, the next thing would be, are there any new trades I could add today? Okay, so normally what I do is I run my option scanner to look for new trades. It's going to go scanner and scan. Come on, let's scan for some trades, guys. Okay, so these are some potential trades. And I'm going to save it. Click Save Watch List. We call this the 22nd of March. Watch list. Boom. Okay. Then I'm going to open this up, 22nd of March. Yeah, right. So what I'm looking for would be, is there a new trade to take tonight? And what I look for would be an uptrend and the price is retraced to a support level. And I think that I can enter at the support level of an uptrend because then the likelihood is going to go up or at least stay at the support level. Okay. So the first one will be Chewy, which I already have. So obviously I won't take another trade on the same stock. Next is BBL. Now, how about this guy? Could I trade this guy? No, right? Wave up, wave down, wave up, wave down. It has broken support, looks like it's going down. No go, all right? I want to see it at a strong support level, okay? Let me change my studies to this one where I trade options. Basically, it's the cash puts. That's right. Okay, how about this guy? Could I trade this guy today? Ooh, look at that. Whoa, very nice uptrend, right? But I won't trade something like that. Why? Because too overbought, overextended, right? Overextended. Usually I like it to drop to the 50 moving average, strong support, and I enter on the bounce, right? Right now it's too far from moving average, overbought, really risky to trade this guy. Okay, VIAC, too overbought, no. The girl has run away, or the guy, don't chase the girl, let them run, okay? Baidu, again, Baidu, I've already got an existing position, so I'm not going to add another trade. Okay, Futu. Now, Futu looks interesting. Definitely interesting. Now, Futu just announced earnings. That's good. And you can see that the trend is still up. It recently is retracing to that 50 moving average support that has been a support previously. So, there is a chance that this guy could bounce or at least consolidate, right? So I could take this trade. Now, if I look at a Williams R, it looks oversold. Oversold is like a rubber band, it's oversold. So it could snap back up, okay? And volatility is very high. Okay, it looks like a 99% volatility. So when I'm trading options, when I'm selling options, I want high volatility. So this looks interesting, but if I'm trading options on it, I want to make sure that there are a lot of liquid options. So, well, so far it says poor, darn it, but never mind. Sometimes I break the rules. Got to trade. I could trade this guy. Let's take a look. All right. So I may choose the 39s. Let's try the 32s. And what I'm going to do is I'm going to sell a put at the 11 delta. So I'm going to sell a put at 95 and buy another put at 90, right? So 95, that would be where? 95. Oh, that's too close. So if I sell a put at 95, basically it means that if it hits 95, I lose money. Okay. If it goes up, goes sideways, goes down, but stays above 95, then I make money. So usually I want this strike price to be far away that it can't get hit easily. Like for example, if you take a look at my previous trades, if you look at what I showed you earlier, like I showed you Alphabet, right? So you can see for Alphabet, this 1760 is very far away. So it's really difficult for me to lose money. Very difficult to lose money. It's really far away. For Google to drop to that level, doomsday, which is unlikely, right? But for Futu, where's Futu? Yeah, if you go to Futu, it looks a bit close, right? So if Futu breaks the 50, it may hit my level, a bit risky. So maybe for Futu, I'm going to wait to see if it bounces off first. If there's a bullish candlestick pattern, and I'm sure it's going up, then maybe I'll put on the trade. But for now, I'm just going to watch it, right? I'm really risk adverse, guys. Really conservative, right? Okay, Baba. I'm not going to trade because it's on a downtrend, short-term downtrend. Again, that's the difference between investing and trading. So for Alibaba, I already have an investment in Alibaba. Because for investment, I have got a long-term view. I'm holding it for 2, 3, 4 years. So even on a downtrend, I'll still buy it as long as it's undervalued. So in fact, if you take a look at my account, you can see that I do have Alibaba. But I've got the Hong Kong version there, 9988 Alibaba. You see I've got about 120 grand on Alibaba. So long term, I'm bullish on Alibaba. It's going up, I'm gonna make a lot of money, right? But short term, it still may go down because it's a downtrend. You can see obviously the trend is down. So since the trend is down, I'll not take a short term long trade on Alibaba. So that's the difference, right? So I would invest in Alibaba, invest based on fundamentals, undervalued, good company, but trade, no, because short-term downtrend could still go lower in the short term. So no Baba for me today. How about TWLO? This one is, okay, again, this is kind of like not really on a clear uptrend anymore. It's kind of like making lower highs, lower highs, lower highs, lower, low, low. So this trend could be going down. Again, I want a very clear uptrend in order to place a long trade. So this guy, not too sure. TSM, Taiwan Semiconductor. Again, you see the trend could be trending down. So it's not a clear uptrend anymore. Pintuotor, also trending down. Spotify, I've already got a trade on this guy. Amazon already got a trade. Snap. Okay, how about Snap? I could take a trade on Snap. Let me think. Let me see where my strike price would be. So if I go for the 39s, and I'm looking for a delta of 10. Now, if you don't know what the heck delta is, what the heck are you talking about, Adam? Watch my options videos. I've created a lot of introductory options videos. Go watch it. Basically, what I'm doing is I'm doing a credit spread. is called a bull put spread, and I've talked about it in previous videos where I sell the put and buy another put. If the price don't hit the put, I make the money. Hit the put, I lose the money. Very simple. Okay. I don't know what the heck accent that was. It just came out. Okay, so 10 delta. No, there ain't no 10 delta here, man. There's only 16 and 8 delta. So how about this one? There's no 10 delta as well. There's only 45 and 40. Okay, let me try. If I put 45, is it close? 45? Yeah, it's a bit risky because you can see it kind of like broke the 50 moving average. Could hit my 45, so no, I'm gonna skip that. Okay, how about C? It's a Singaporean company, by the way. Again, you can see that that it is at this 100 support. I'm not too sure. Again, I'm looking at the short-term moving averages. See, when a 20 crosses below the 40 moving average, like so, it tells you that the short-term trend is down, right? You can see the short-term trend is down right now, okay? So ideally, I want a 20 EMA to be above the 40 EMA for it to be a short-term uptrend, okay? AGG, what's that? Oh, that's a downtrend, right? That's definitely a downtrend. You don't want to F around with this guy, right? It's going all the way down. This guy, ooh, nice uptrend, but overbought. So you can see that in trading, you got to have a certain criteria and you're going to be really strict. No. And sometimes I can go through the whole day. If I don't find the perfect trade, I don't take it. So that's the difference. You find a lot of amateur traders, they are trigger happy. They want to take a trade, and they will jump into a low quality trade. And if they don't take a trade, they find that, oh, the night was wasted, the day was wasted, because they say, I want to make money, right? But as professional traders, we know that there are three things you can do. You can buy, you can sell, and you can do nothing. And doing nothing is doing something. Doing nothing is a strategy. So I've learned over the years that if I don't have the perfect trade, where it's really safe, very high win rate, very high chance of making money, I don't take the trade. Okay, so do nothing is a good strategy, and that's how I consistently have a very high win rate, and that's how I make money consistently in the markets. Not because I'm lucky, not because I'm a genius, but because I'm very selective. I only take the perfect trades. It's kind of like baseball. All right, so you only swing when you have got the perfect pitch. Then you swing. You don't have, in real life, in baseball, you have to swing if it's within the zone. If you don't swing, it's ball, and you get called out, right? But in trading, you don't have to swing if you don't want to. And you only swing if you see the perfect pitch that you know you can connect and you can hit a home run, all right? Okay, ESGU. Now, this one looks interesting. This one looks interesting because we've got a very nice uptrend, right? We've got a nice uptrend. The 20 is still above the 40 EMA. We've got a wave up, wave down, wave up, wave down, wave up, wave down. Looks like it's bouncing back up. This looks nice. But the problem is, this is a foreign ETF. Okay, it's an ETF, and normally options are not that liquid on foreign ETFs. When I'm trading options, see, no, very few options. I can't trade this guy. What a waste. Perfect trade, perfect price action, but the options are not liquid on foreign ETFs. Last one, SCHP. Looks like today, no business. No milk today. Okay, now this guy, well, you see, this guy's on a downtrend. This guy's on a downtrend, right? So, no, I'm gonna trade that. All right, so no trade today for now. But you never know. Sometimes I can't find a trade, but my students may call out trades and I steal their trades. Let me check my community, right? So the great thing about having a community is that I share my trades with my students and they share their trades with me as well. So we are, it's a win-win relationship, right? So on the options chat group, bullish trades, none called out so far. We may have some later on, but right now, no one's calling on any trades right now. Okay, let me look at my private group. This is my private group, where this group, we've got all my fellow traders who are working in my company, and many of them are professional traders. And some of them, they do this for a living, right? So no, private group, nothing as well. We call it the free money club because we're there to make free money every day, right? So far, no one's posting trades right now. Maybe still early, right? Maybe they may post some trades later on. So far, no trades today. So the next thing I do would be I look at my investments, my long-term investments, to see is there anything to buy tonight. And I buy when the price is undervalued. I buy when it's at a support level, right? So let me go to this account, which is my investment/trading account. And what I do is I will then run through all the stocks that I own, and I look at some of the existing option positions to see, again, is there anything to take profit? Is there anything to buy, right? So let's start with the first one. This is an Apple put, right? And this is I sold a put on Apple, and you can see I've made 433, but I've got another 394 left to milk, right? So once I make the maximum profit, I will then close this, right? So still another 394 to go. Now this one we saw before, Adobe, again, I've got a put on this 330. I've still got 359. So I've only made half the profit right now, right? So I've got another half to go, nothing to take profit on. Amazon, I've got a put there, made 800 on that put, 2,000 more to go. ARC, got a put there, $200 made, another 1,000 to go. Okay, Boeing, I sold a call, made 1,005, another 1,000 to go. So again, it's not there yet. It's like you bake the cake, is not ready, or your fruit is not ripe. When it's ripe, you pluck all the fruit, right? Let's see what else. Okay, Costco, I've got a put there, made $800, 395. So this guy's almost right. Gonna take profits in a few days. My full profit should be about $1,000 on this guy. Okay, CRM put at 338. So this is still negative. All right. So let's see if it turns around. If it doesn't turn around, then what I do is I just take ownership of the shares, because when you sell a put at 215, it means that I'm obligated to buy 100 shares at 215, which I want to, because it's a good company, right? And if I don't get the shares, I just keep the premium. Domino's Pizza made 1,000. Oh, this one is almost ready. Yep, I could take profit today. Let's take profit, right? I made 1,003, only $100 left. Might as well just take the profit, right? So you can see I sold the put at $7, and I'm gonna buy it back today at 54 cents, which means I make 7 minus 50 cents. I make $6, about $6.70 in profit. Okay, and you can see this expires on the 1st of April, and that's 8 more days to go, so I might as well take profit today. All right, so let's take profit. I'm gonna highlight this guy, right click, I'm gonna close the trade, and I'm gonna close it at 54 cents. Let me see if it fills. It may or may not fill, right? So if I don't fill it at 54 cents, then screw the market, wait for it to fill so I can get my 1,003 and run. Okay, 54 cents. There we go. Submit my trade. Okay, there it is. So let's see if it fills. If it fills, then I would realize another 1,003 in profit today. Okay, Estee Lauder, 290 call, made $100, 640 left to go. Google, sold the put, 559, nope, a lot more to go. Sold the call, 441, halfway there. Okay, any more? JPM call. Now I sold the call. Now the price above my call. So looks like I'm gonna allow the market to take away my shares, which means I'm going to sell JP Morgan at 141 strike price plus the premium collected 489, which means my sales price for JPM will be 146, right? 146. Now you can see I bought JPM at 95. So by selling at 146, that's a pretty good return, right? 146 minus 95. Yeah, that's a 53% return. It's not too bad, right? So basically when you sell a covered call, we call this a covered call, right? I sell a covered call at 141 strike price. So what that means is that if JP Morgan stays above 141 by the 26th of March, I'm obligated to sell my shares at 141. But I collect 489 in premium upfront. So 141 plus 489, basically I'm selling my shares at 146. And I bought it at 95. That's a nice return, right? 40+% return in 12 months. But if JPM stays below 141, if right now it's at 152, right? So if it goes back below 141, then I won't lose my shares. Okay, so I'll keep my shares, but I keep the full profit of 489. So it's a win-win situation, basically, right? So JPM goes down, I win. Goes up, I win. I win in both ways. That's the beauty of a covered call. You win in all scenarios, as long as you hold a great company and you're very profitable already. Okay, next one would be Microsoft. Sold the put at 217. Right now 400 more to go, halfway there. Nvidia, not there yet. Pepsi, P&G, sold the 2 puts. Okay, this guy could take profit soon. Yeah, let's take profit on P&G. Made $700, only $48 to go. Might as well take the profit today, right? Take and run. Okay, let's see if I can close this trade. Click on this, right click, close the trade at 12 cents. Submit.
Order filled.
Filled the order. Boom. You can see realized profit $700. There we go. And I do the same thing on my other account because I've got the same trade here. So P&G. Where the heck's P&G? Oh, there we are. So my P&G is over here. Click on this. Click on that. And I'm going to close the trade. Close the position. Going to key in the password first. Okay. So close the trade at 12 cents. Filled the order. Okay, there we are. Oh, there's small profit over there. Okay. I took a small position. Okay, so at least I took some profit today. Okay, what else? Triple Q. Now that's a bear put spread. So in other words, if the Nasdaq goes down, this guy makes a lot of money, right? So it's a hedge. SPGI sold the put. Okay, I could take profit on this guy as well. All right, 42 left. Let's take profit on SPGI. Click on this. Let's close it for a profit. Wait a minute. Yeah. Close. $0.20. Hit me, 20 cents. Boom. Not filling. Leave it. You don't fill me, that's your problem, market. Fill me. Be patient, right? You'll get filled later on. And if it fills, I collect another $900, right? Should fill. Let's see if it fills. Okay. Spotify, Viva, 545 halfway there. This is my VIX trade. Right now, VIX is still down, right? So basically, if the market tanks, VIX goes up, this guy makes a lot of money, right? So I have got hedging trades right now. So when people ask me, Adam, where do you want a market to go? Do you want a market to go up or down? Honestly, I don't care. If the market goes up, I make money on some trades, lose on some trades. Market goes down, I make on some trades, I lose on some trades. So either way, I'm fine. So, I don't care where the market goes really, right? Okay, so that's it. Those are all my existing positions. So the final thing I do, now the next thing which I do is I look at the stocks in my portfolio and I basically see if there's any which I can add shares to if it's undervalued and near a support level, right? So I'm gonna go to the stocks in my watch list and let me just see. So McDonald's, nothing to buy, it's overextended. Boeing looks like it's retracing down, so waiting for it to come to a support. Yum Brands, you can see it hit resistance over there. There's a resistance, hit resistance. Looks like it's retracing back to the moving averages. When it comes back nearer the moving averages, the 100 moving average, I'll probably add more shares over there. JP Morgan, retraced over here. Nothing, I'm not going to add to this. In fact, I'm thinking of selling my bank shares. I think they're a bit overvalued. CME, nope, not retraced enough. Okay, now this guy looks interesting. Now you can see this is in a range, right? This is a very clear range. We've got a support, we've got support coming, resistance, right? So this is what we call a range. So once it comes here, right, I may take a trade, a long trade to play the bounce back up. All right, so I take a short-term trade over there. We'll wait for it to hit 109 to take that short-term trade. At the same time, for my investment portfolio, I may add some shares at this level as well. Okay, so I'll watch that in the next few days. Yum China, you can see very nice support at the 50 moving average, right? So wave up, wave down, wave up, wave down. Looks like it's going back up again. So I may take a short-term trade on this as well, and I may add more shares in a while. JD. So JD.com, I just took a small position recently. So you can see I just bought some at 85, and if it goes back, if it goes down to 80, I'm gonna buy more shares, and 73 buy more shares, because this is an investment. For investments, the lower it goes, the more I buy, because I get a better discount, so that's a good deal. So you can see these are the previous support levels where I'll add more if it goes to those levels. All right. Alibaba looks really attractive. You can see very strong support at the 150 moving average, right? You can see very strong support over there. So right now it's near enough, could add shares to this, but I'm not going to add more shares to Alibaba. You know why? Because I already have a full position. It's like, if you got a full position, like me, I've already got about, 6% of my portfolio allocated to Alibaba. I don't go above 6%. You can see 6% tends to be the max allocation I have to a certain stock. Okay. So what I also do is I check out the chat groups, which I'm managing. I'm managing so many chat groups, not on my own. I've got some great other coaches and mentors and trainers who are helping to manage all these students. Oh, Starbucks looks really good. Really? Okay, let me just check that out. So sometimes I get ideas from these chat groups, which when they ask questions, I help them. At the same time, they post their potential trades. Let's look at Starbucks. Someone called out Starbucks, but it was not very specific what trade. But let's take a look. Do I see a nice trade on Starbucks? Not bad. You can see it's still an uptrend, 20 above 40, right? Wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down. Yep. So nice support. Looks like it could be bouncing back up. But the trouble with Starbucks is you can see that the implied volatility is only 6. So very low volatility. And when I'm trading options, selling options, I want to sell on high volatility, right? So low volatility, I don't get really great premiums for my options. And you can see that the Williams R, it's not that low, right? I like it to be lower, which means it's more oversold, more likely to bounce up. So it's an okay, again, it's an okay trade. It's okay, but it's not fantastic, right? So I like to take fantastic trades because it's about selectivity. So as you can see, right now it's 10:11 p.m., 10:11 a.m. Eastern time. So I've only done this for 40 minutes, and that's it. My day is over. I'm gonna spend the rest of the evening with my kids, my wife, watching TV, go chilling out because there's nothing to buy, there's nothing to trade, and that's it. Now, if I had something to trade, I had something to buy, I may take another 20 minutes or half an hour, that makes it an hour, and that's what I do every day. That's my routine. So again, I spend an hour and a half in the US session and another hour and a half in the Asian session in the morning where I manage 2 other Asian accounts. So that's a day in the life of an investor and a trader. Hope you learned something. Thank you for watching. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.